Welcome back. You're watching Trade of the Week with me, Zinati Puma, and joining me now for a technical analysis on Bidcorp, FirstRand and Woolworths is founder of Herenya Capital, Petri Redelinghuys. Thank you so much for your time, Petri. Quite interesting ones that you've chosen today. Bidcorp, I was talking to an analyst last week, and he said that it's a sleep at night stock. Would you agree? Because also I was looking at that chart, and yeah, it hasn't really been as great. It's off its highs.
Little bit, yes.
Yeah, a little bit. So, I don't know, would you call this a sleep at night stock?
Well, I think it's in a very it's got a large moat around the business. I think it's going to be very hard to build the type of business to compete against them. It's a very diversified business, of course. This is mostly sort of the food stuff as well. I think that, you know, from a share price perspective as well, it had a bit of a wobble in 2020, as did most things during COVID. But for the rest of the time, it's just been on a slow sort of grind, slightly higher. It's not one of those stocks that's ever going to shoot the lights out. Okay. You know, by tenfolding in a short space of time. But maybe a sleep at night stock is a nice way to describe it.
Yeah. I mean, though, looking at that pent up demand, you know, after COVID, they did shoot the lights out in terms of earnings. Yeah, but now
the share price went from what, 340 rand to 460, 470 rand. So that's quite a big move.
Yeah, right? Yeah. And then now I noticed that with their last results also, growth maybe was a little bit slower than we did see, but still good, right?
I think that we're operating in a very difficult environment, right? I mean, this is something that has been a very big theme for a long time, and I've been on here saying, well, they're going to cut interest rates any second now, 3 times this year, and so far that's been proven wrong. And I think potentially now, you know, the view's changed a bit to, well, maybe 1 interest rate cut for the year if we're lucky.
Some even saying zero.
Some even saying zero. And look, inflation remains persistent. That puts pressure on everybody, the consumers. And obviously someone like Bidcorporation or Bidcorp can't escape that, right? So it's a difficult environment to operate in. So yes, maybe earnings are somewhat disappointing. You know, as long as you can keep them positive, I think you're doing really well. And what we've seen, I think, over the years and years and years that markets have been around is that things are cyclical, right? The bad times eventually go away and the good times come back, and then someone like Bidcorp is going to be very well positioned. It's really the companies that weather the storm the best are the ones that are going to absolutely thrive when the good times return.
Okay, well, let's go to bed. Let's go. Let's take a look at the technical chart there.
So it's a bit of a weekly chart that we're looking at here. The sort of initial analysis is really done on the daily chart. And I think the common theme between the stocks that we're looking at today is we're all picking bottoms, really. Sorry, I'm now waiting for the data to load. Your internet is slow in the studio. All right, so
everything is slow.
All right, so what we have here, I'll just do a little horizontal ray, is essentially support and resistance levels on the stock that have been quite significant in the past. So I'll make them solid. Sorry, I use this all the time, so that's why sometimes it doesn't always look uniform. All right, so there we have quite a significant support level, and then we can sort of put the same in for a resistance level. And we are now in the middle of that region, right? We could also argue that we've got slightly weaker support around this level, which is what we're trying to trade off of. So for the sake of example, I will remove that, and I will remove, well, I'll keep this one for now. It becomes important a bit later on.
Okay.
So from here, essentially, we have a bounce from this sort of midpoint of the big range that it's been in for some time after it had broken out of the range and retested. So what our thinking is here, as we can see, it bounced quite strongly today. It sort of tested the lows here and bounced quite strongly today as well. I'll zoom in a little bit so you can see a bit more. So our thinking here is that we can pick up this trade here. The closer to this 413 Rand level, the better. But if you have to buy it sort of now, anything under 425 or even under 430 Rand, under this longer term moving average, in other words, and this moving average being the 200-day moving average that we have here, right? So the thicker blue one, 200-day, the shorter blue one, 20-day. So if we can sort of buy below this 200-day moving average, we can put a stop loss below 213 if we like, with a target price of essentially back to the swing high, which is around 470 Rand. So that's just a nice little technical trade. We can argue that it's a trend following trade since we are taking a long, and if we look at this share price over the last little while, the trend is very clearly up. So it's not one of those, we're making a life-changing investment here. We're just taking a short-term trade. We've got a decent risk-reward ratio.
Okay.
And these are the, if you're playing cricket, to use a metaphor, these are the ones and the twos that we're hitting here.
Okay, so it's a case of, you know what, the trend is still good, but, you know, every little point of pressure that you see.
Look, every now and then it gives you an opportunity to sort of get on the bus, right? Yeah. Or to get onto the trend. Yeah, and so what we've had in the last couple of weeks is, if you look at the S&P, for example, so I'll just type in way the wrong place here. So I'll just pull up this. So if we look at the S&P 500 index, we've had quite a strong correction, right? So now, yes, our longer term target is for maybe a bit more weakness, but we can see here that the market has now started to potentially build a bottom here from a momentum perspective. We've started sort of slowing down the rate at which the market is falling, and we see a little bit of green for the first time in a few days. Also, there's a lot of days where the market is just down one day after the next. Yeah. So statistically, this thing is starting to ring bells. It's due a bounce, right? So that bounce, I think, will sort of feed into our market as well. And something like Bidcorp, some of the retailers, some of the banks, these things will all bounce as a little bit of relief comes into the market. So it's not saying that the S&P 500 is now, this is the generational buying opportunity. Absolutely not saying that. We do think there's probably still a bit more downside to come. However, in the very short term, it's probably time for a bounce. And I think that strength coming in there, if we can see from a relative perspective how Bidcorp has traded versus the S&P 500, for example, it's relatively quite a bit stronger. So a bounce in international markets as well as our local market will probably push Bidcorp back to its recent highs.
Well, talking about pushing, let's talk about pulling down, because the financials haven't looked too good recently on the JSE. The only thing that we've seen really picking up a lot is the resources. So let's go into banks, FirstRand.
So, okay. I have a hat to eat first. Okay. Last week, it was 2 weeks ago. We'd said the trades we looked at was Sasol, Standard Bank and Absa Bank. So entry points on these were basically higher on both, right? Okay. So if you look at our original Absa trade here, we wanted to sort of enter under this 146 level, and our stop loss was sort of, call it below 142. It's traded below our stop loss. So full disclosure, we bought more today.
Okay,
right?
Yes, all right.
So we bought more today for a couple of reasons. One, well, jeepers, loading data, is we do think that this sort of area in which the stock is trading now is quite a significant support area, right? So that whole area here would be an attractive place for us to buy. And that is true for most of the banks. So if we start with FirstRand, I'll just remove our previous analysis here. We had a trade on here a couple of weeks ago, I think, with the... a couple of months ago now.
Quite interesting. The banks are really cheap.
Yeah, I mean, look at these things. They're trading here at the bottom of what's essentially a massive, massive range, and it's bounced off of the bottom of this range. And if you look in context to the rest of the world, they haven't really moved. I mean, they've been going sideways for, what is this, almost 2 years now. Yeah. Right? And again, in context with the rest of the world, the S&P 500, the NASDAQ, our market is a bit lackluster, but international indices, international markets have really performed very well, and yet the banks have lagged somewhat. So I think this comes back to that situation where South Africa has been super overlooked. I mean, we did a list of, somebody shared a list of stocks that are trading, below 50%, below 20% of their net asset value. And it's a very, very, very long list, right? And they're obviously all, it was a South African list, but it, I think, is indicative of the fact that South African stocks and equities have really been overlooked. It's been a very high-risk environment. People are flocking to that which has been considered safe all this time, which is tech. And, commodities have been overlooked. And obviously emerging market diversifieds have been overlooked. So I think that there's an opportunity here to, just take this sort of the banking trade back to the top of the range.
Would you say that the banking sector is safe, as much as it is overlooked and it seems that quite undervalued?
I think it's a safe sector. I think it's one of those things. I mean, it's one of the most developed industries in South Africa, right? We have world-class financial services in South Africa, which is something I think we can be very proud of, and something that's worked in our stead for a very long time. I guess, one thing that's put a bit of pressure on the banks, in particular in financial services, has been the grey listing.
Yes.
We are working our way towards getting off of that list. So I think that even if you look in our business, for example, the amount of scrutiny you've come under for sending money offshore. We do, we do quite a bit of offshore managed portfolios and that kind of stuff. And sending money to and from the States or to and from the UK or wherever it might need to go, there's a lot more questions being asked now.
Yeah.
Where does it come from? Proof of source of funds,
Much
all this stuff.
now, yeah.
Which is, I know it's onerous and it's a pain for a lot of people, but I get it, right?
It has to be done.
Follow the rules. It has to be done. So I think that that's put a little bit of pressure on the banks as well, as we just become a little less attractive to more risk-averse investors internationally. We come off that list eventually, which I'm sure at some point we will. A little bit of risk on back in the banks. In the meantime, for us local investors, ooh, sorry, the microphone. Yeah. I think it creates an opportunity for us to buy quality businesses if we are intent to hold them for a long time. So FirstRand, unlike Bidcorp, but you could probably use it as an entry point and keep the stock for the next 20 years, or you could take a leverage CFD or derivative trade on it back to the swing highs. The same counts, or the same goes for FirstRand in this case, where you could probably buy it here, leave it for the next 20 years, and you should be okay. Or if you are, leveraged sort of CFD trader or futures trader, this is a good place to try and get out of it around sort of above 70 to 72. That would be your target range, and anything below, 59 or 58 would be your stop loss. So you've got a really good risk reward, and I think that in the coming week we probably see markets bounce quite hard, and this will probably push the banks locally as well.
All right. I know that a lot of us could probably sleep in a Woolies store because you're just surrounded by luxury. But yeah, what do you make of this stock? Is it a sleep at night stock, or are they just risks where you cannot fully feel safe?
I don't know. I think, again, this is a buy. Again, we're sort of picking the bottom here. I guess this is a bit more of a mean reversion play rather than a range play. I've indicated a support zone here, and now please note that these support zones aren't, absolutely perfect, but we've got multiple contact points with a sort of area of support, if you will. Woolies is around that area again, so this is quite a high probability entry point. We are on a long enough timeline, I suppose, trading with the trend, right? If you zoom out enough, the chart will go up. If you look over the last year or so, essentially it's just gone sideways, right?
Yeah.
If you look over the last, call it 12 months, essentially it's gone absolutely nowhere, right? I mean, from June to June here is basically flat, right?
Yeah.
So from this perspective, I guess it's a range trade. From a longer term perspective, it could be considered trend following. However, either way, we're trying to pick it up in an area of support and mean reverting it back to that 200-day moving average. So again, you could take two perspectives here. One, you could probably, I don't want to say get married to the stock here, but make a long-term investment here. It's a high probability zone to do that. The alternative option, which is obviously I think most of the people that watch the show, would be people who are sort of taking a leveraged derivatives trade on it and essentially looking for a decent risk reward entry point. And I think you've got one here. You could stop loss below 54, give it some space to move and to breathe, and your target range would be between 69 and say 66. So you've got a relatively decent trade there. I'll mark it in for you if we buy it here.
It's quite interesting, just looking at that chart like on a year-on-year basis where it's now basically back to what it was a year ago, pretty volatile. And I wonder if, has Woolies given back all the gains that we saw after the sale of David Jones?
Oh, right. I can't even remember how long ago that was.
Yeah,
but
was
I mean,
it 2022, early last year? I can't remember.
Yeah. Let's look at a weekly chart. I think, probably.
Yeah, because I remember there was a lot of optimism into the stock then, but it seems that...
But retailers have had, so 2022 is here. Yeah, well, I guess it has, hey? I mean, it's basically back to where it was in 2022. So, yeah. I think retailers have had a really tough time. I mean, again, it's this inflation situation, right? It's this inflation story. If you look, people are trading down. I mean, even the likes of Pick n Pay, there's a lot of stories that are making the rounds. People are, large. Pick n Pay has this like sort of franchise model where you can be owner-run store,
Yeah.
And a lot of those owners are reportedly, trying to find a way to switch to a different brand.
Yeah.
Which doesn't bode well,
Pretty
right?
tough, yeah.
So it's a tough environment, and I don't think, that's not a shot at Pick and Pay. That's more a shot at the entire sort of retail industry.
Yeah.
Well, food retail and clothing retail, because people are stretched, hey?
Yeah.
Like, I don't know. I've had to buy some stuff over the last couple of days or last couple of weeks, and I tell you, it was scary, like trying to buy a new pair of walking shoes. Wow.
I'm even following an Instagram accountant, influencer, where she tells people how to shop for a week for 500 Rand. I'm like, what do you mean?
How?
I bought 3 things for 200.
One packet. So give her a shout out. What's her handle?
Yeah. I'll definitely do a shout out next week.
Okay.
Let's go into the educational segment. Trend support versus horizontal support.
Okay, so this is quite I suppose it echoes with what we're doing today. What we're doing really is essentially buying things of horizontal support levels, right? So we can see here that all the examples that we've given thus far have been essentially horizontal support levels. We're looking for multiple contact points around a particular price level. So I'll use Bidcorp as our example, and I've switched to a weekly chart here now, right? So we can see here that it's not necessarily absolute contact points, but sort of interactions with a particular level. So we've got one there, we've got one there. I don't know if you can see my cursor as closely. I'll zoom in a little bit, make it easier for you. And I'll make this bigger. Okay, that looks a bit better. All right, so we've got multiple contact points here with a particular sort of level, right? So we've got one over there, we've got one over there, we've got one there, we've got obviously one after the next here, we've got one there as well. So this becomes quite a significant level. And what you could do is you could say that this isn't necessarily an absolute hard and fast level. I think many people have, died on that hill. It has to touch exactly this point or it doesn't count, and that's not always true. It's more of a zone, right? So give or take a few percent around that area. It's just really an area where you can see when the price comes down to this area, there's interest and participation.
Okay.
Here, for example, the price smashed through that area. The next morning, they bought it all the way back up. They try to get it down through here again, the bears, but the bulls sort of take control and buy it back. And every time it's come down to this level, the institutional interest enters into the market and buys the share, right? Or at least buyers enter into the market and buy the share. And the same is true for resistance levels. So support versus resistance. When there's support, people are buying at that price point. When there's resistance, people are selling at that price point. So these are essentially horizontal levels, and they can be quite powerful in the sense of, okay, this is potentially where you could put a stop loss. This is potentially where you could take an entry point. They kind of act like magnets in the market sometimes. So you can say, well, I want to buy on this level and just wait a few days. And, you might feel like you missed it for a while, but as you can see, it runs away, comes back, tags it again before it moves, right? So these are quite significant levels in the market, and they can be very useful.
Okay.
Essentially, the rundown on how they work. Then if you look at the trend line support, okay, trend lines, you've got the moving averages, obviously, which are very, very helpful, and they can act as support and resistance, but aren't all that accurate. And then you can essentially draw, for example, a trend line like that, right? So that's another example of support to resistance level. Now, these can get a bit tricky because there's essentially a primary, a secondary, and a tertiary trend, right? And these would be different sort of time frames. So what I've done here is I've connected the lows that we saw in 2022 to the lows that we saw, in 2020, to lows that we saw, in September 2022. So that, I think, we could call over this time frame, at least the amount of data that we're looking at, we can look at our primary trend, right? From here, you would now have secondary and tertiary trends. So this move from here, for example, connecting as many bottoms as we can over there, you could call a secondary trend, all right? So it is in the direction of the primary trend, but it is slightly steeper than the primary trend.
Right.
Then the corrective move that brings you down back to this space is your tertiary trend. So essentially what you're doing is you want to be buying in the same direction as the primary trend, and you want to be riding the secondary trends for the most part.
Okay.
And the tertiary trends are then those corrective moves that come down. So here, for example, this move from down back to the primary trend, that would be a tertiary trend movement. So those would be your I sit and wait, and when I get the opportunity, I take the long trade to follow the primary trend.
All right. Well, thank you so much for that, Petri. Really appreciate it. That was founder of Herenya Capital, Petri Redelinghuys, with this week's Trade of the Week.